Hi, hello, welcome friends. In this video, I am going to discuss about secondary market. In last video, we have completed that relating to corporate actions. So now I am discussing related to secondary market. So welcome to investment banking classes. What is there in secondary market? In secondary market, these the people, many of parties are participating in mainly the retail investors or at public at large in investing the securities and to protect their interest and to promote their market and regulatories like SEBI or security regulations this market and all participate in the market. What is happening in secondary market? So many parties are participating in the many retail investors are public at large in investing the securities. Why they will go to protect their interest and to promote their market and to the regulators say like SEBI and securities exchanges regulators in the market. So all the participants in the market they will try to go in this market. And if for example if someone want to become a stockbroker or stock some companies want to issue some securities, they have obtained permission from the regulators. It must need to get a permission from the regulatory or governments also promote these markets by introducing or modifying different laws like SEBI Act, Companies Act, so that investors' money and surplus money in the market can be used for productive reasons like to start a company or create employment, etc. So government also try to promoting government also introducing some provisions in SEBI Act, some provisions in Companies Act to encourage these brokers, to encourage these persons, secondary persons. When the secondary persons is in the market, whatever the surplus money in the market that will be used for the companies, that money used for companies, it will become a productive user and it will also create employment to the persons. And this government also brings some policies to attract more foreign investors in the market, so it will more liquidity or cash availability to more companies can come and raise the money from the market. So what the government is doing, so it will give some provisions in SEBI and it will also promoting and give some foreigners policies for the foreigners will invest money in the Indian market, then also our companies will work and our for the work they will get the employment, they will create more employment, our people will get the more employment. And some of the investors also come to the market for trading opportunities, like they will buy the shares, they will buy the derivative, etc. And they may go for sell on the same day. If we see in the market we have intraday trading or intraday trading, so some persons will do always in intraday trading only and some persons will go within a week, they will sold and they will see the margins. So when cash is flowing, the liquidity will increase in the market. So the it will also encourage for that persons also. And here the hedge funds are also known for this short term investing or trading in the market. We know that in funds we have three types of funds. One is mutual fund, another one is private equity fund, and another one is hedge funds. Whereas mutual fund means pulling money from the investors and investing in the shares, securities, bonds, whatever the asset they want, the fund manager will decide and he will invest and he will get the surplus and that surplus will be distributed to that unit holders. Where in private equity, the private equity funds will be invested in mainly in equity portion, mainly in the startup companies. So there will be capital will be whatever the fund will be for long term purpose. And in hedge funds, they may invest in any asset. They do not have any restrictions. So hedge funds also there for short-term purpose, and these are trading in the market. Most of the retail investors and mutual funds etc. invest for long term, like 5+ years or 6 years to then, so they can sell at a higher price later and make the profits. Depend on the demand and supply, and securities price will keep increase or decrease in this market. So many of the persons will go for long term, and they will think after certain longer period they will get more profit, so they will take the long position and they will sell after 3 years, after 5 years, and they will make the profit. And for example, if they more buyers in startup stock, and since the market reported profit, stock price will increase. So when the profits are increasing, the stock price also will increase in the market. And other reasons also there for increase or decrease in the price of securities in the market. What are the reasons for increasing or decreasing in the price in the security? There may be results declared by the company on quarterly basis. So in the company which is listed on stock exchange, it must report its profits every quarter. So after quarter the results was declared. Based on that result, the share price may go up or may go down, because based on that company's performance and the report, whatever the earnings of the companies increase or decrease, based on that income increase or decrease, share price may go down or increase trend. And after that, another reason will be government policies. So government policies, that physical policies like increasing or decreasing the tax rates or foreign investment, or allowing or disallowing some exemptions, the benefits, or some policies to government, some subsidies, freebies, whatever the cases. So based on the government policies also, the share market price will increase or decrease based on the policies. So first reason will be based on the quarterly results, whatever the results was given by the company. And second one will be the government policies, whatever the policies will be there based on the policies. So if the policies are beneficial to the company, the share price may go up. If the policies are against to the company, the share prices may go down. And some monetary policies, decisions of central banks like this RBI and SBI, whatever the banks, when the banks are increasing their interest rate or decreasing their interest rate, based on the increasing or decreasing interest rate, the company share price also changed. Because if the interest rate is more, the company try to reduce its borrowing. Reduce borrowing means reducing is cash inflow, means it does not have cash. When it does not have cash, he will not think about expansion. When there is no expansion, there no will be profits. When there will be no in profits, the share market price of may go down. So based on the bank's interest rate also, share prices are decreases or increases. And they will change, banks will have some ratios, that SLR ratio and CRR ratio. So CRR means that cash reserve ratio, and SLR means statutory liquidity ratio. The ratios was changed by the company, changed by the bank. So because of that ratio changed by the bank, then also company share price may go down or may go up. And demand and supply changes due to liquidity in the market. So firstly, because of results declared by the company, and secondly, the government policies issued by the government, and thirdly, the monetary policies are decisions taken by this bank, increasing or decreasing interest rate, and after that demand and supply of changing due to liquidity in the market. So that also reason for change in share price. There may be some nowadays the corona variant is increasing. So if any asset closing price like equity shares are falling, the money will move to bonds or gold, etc. So that price can go up or go down because of this market reasons. What is there in market reason that also changes the share price. And political reasons, like no party is in position to form the government, can create panic in the market, so market can fall. So if we go for the results, if we, I think last time, I think in Karnataka they don't have the proper votes for specific government. They don't have the proper position to form a government. So when they do not have a proper position to form a government, then the market will panic. When the market will panic, the share price may go down or go up. And some international news was came that Ukraine Russian war is there, and our government may supporting to Russia. Our government is giving support to that Russia. This type of news when the international news is there, that international news also changes the share prices, like wars or climate issues affecting some countries, etc. To measure the performance of the market or stock exchanges like index like Nifty 50, S&P 500, etc. So if overall market or most of the stocks are up, the indicators reflect the positive changes or increase in that change. When the index is in increasing trend, it is a positive change. It is means that index is in increasing trend. And whereas international investors can check these indicators and different countries to find these opportunities to invest based on which countries are providing more returns to them. So if these foreigners are all see the index feature is going up or going down, based on that they will decide the take the decisions where to invest their money. And government and regulatories also closely observe this market to get a pulse which industry is struggling more, etc. So they can come up with policies to support that industry. So government and regulators will see the market and public pulses, and they will see what industry is struggling. Based on that they will give some instruction to industries. These are the reasons for the share prices may go up or go down. What are the reasons? Firstly, the company's declared results will be first reason, and second may be government policies, and third may be banks in change in bank interest rates, and third may be demand and supply will be there, and fifth will be the political party he is not able to form a government, and international news was there against the market. These all are the reason for change in share prices. If you want to participate in the securities market or you want to buy a shares, then you need to get some formalities. What are the formalities will be required to participate in the market? Firstly, you need to have trading account, and after that you need to have demat account. After that you need to have a bank account. So these three accounts will be required to participate in the market and to buy or sell the securities. So in firstly the trading account will stockbroker that give access to stock exchange to place buy or sell orders. So in the trading account, what can you do? Buy or sell the stocks. Whereas in demat account to store the securities like shares in soft copy or demat form. Demat form means dematerialized format. So the trading will be done in trading account, and that stock will be stored in demat account and the bank account to keep the cash, and then transfer it to seller if you need buy, or if you are sell, the money will get to that bank account. So for that trading, for that buying and selling in security market, you need to have a trading account, you need to have a demat account, you need to have a bank account, and you need to have all KYC, that is know your customer documents like PAN card, Aadhaar card, etc. to this account, so people are not using this market for money laundering. So this money laundering means we will see in anti money laundering concept, where that dirty money is converting into legal money. That is the case in we will see in the anti money laundering, and in Companies Act also they are introduced that PMLA, Prevention of Money Laundering Act. So for the trading purpose you need three accounts. One will be the trading account, one will be the demat account, one will be the bank account. So market intermediate, stock exchange, stock brokers will help in all these formalities, and where if any company or government wants to keep these securities in the exchanges, they need to get listing agreements. So any company or government when want to keep their securities, they need to have a listing agreement with these exchanges, and they need to follow the listing fee. They need to pay the listing fee at the beginning of each year, and also this company should also publish this follow these rules. What the rules they also publish, and they also submit this quarterly return, they also submit this annual financials, so investors can get access to these numbers and decide to invest or not in this company. If you want to invest in this Reliance Jio, if you search in Google, you will get the Reliance Jio financials. Based on that financials, you can see the figures whatever they there in the financial, and just based on this financial you need to take the decisions. So must have that. So they will means they will pay the fee amount to listing security exchanges at the beginning of each year, and they need to publish this data to public. Then only public will decide whether to invest in this company or not. If not publishing, they will get the penalty. They will government will levy the penalty, and this type of companies who are not publishing, who are not submitting their quarterly financial statements, etc. So companies should also inform any changes in the board of directors or CEOs to the stock exchange. So company need to give the end to end information to the stock exchange if there is any change in CEO, if there is any change in management. This also need to disclose to stock exchange within 15 days. There will be there. And if these companies are investors, why these intermediaries will be required? That what are the important for intermediaries in the market? That intermediaries will work stock exchange. Stock exchange means this is one place where the investors can buy and sell securities. Earlierly, in the trading activities were happening trading markets. If we see, they have markets. So in the market, if you go for the fish market, if you go for the Raitu Bazars, they will all sellers will be there, and they will put their products in front of them, and they will give, and they will announce their product and their product and their prices, and customers will flow, and they will see the sellers and their product, and they will see. In past days this type of market will be there, where trading will be happening in trading. In case of stock market, what they will do now, the stock market will go for the tenders quotation prices. So first time this person, second time this person, third time this person. After that they will rank the bill and physically trading will be happen. Whereas so there may any many exchanges in India like this Bangalore exchange, Chennai exchange, Mumbai exchanges will be there at that point of time when the physical market will be exist. In physical market they will feel that Reliance company shares is trading this price, who want to buy, and they will announce the company name and on the prices. So the customers who are in front, they will quote their prices. So they will tell, one person will tell for 500, one person will tell for 600, one person go for 700, who is quoting the highest price, and after that they will give the three intimations. So first time this person is still, second time this person is the third person, they third time, then they will rank the final bill, and that shares will go to that person, and that customer will need to pay the amount whatever he quoted. That is past market. And nowadays all tradings will be happening electronical way, that is online way. So investors from any city or any country can buy these securities in popular exchanges like this BSE or NSE stock exchanges will be there, national stock exchanges and Bombay stock exchanges, etc. So in India more trading is happening NSE. If you go for a world war, New York stock exchange is more popular. So in India wise NSE is the more tradings, and if you go for the worldwide, New York stock exchange will be the most popular. The stock brokers are primary brokers. So these are who is the persons, these are the members of stock exchange or investors can open trading account through these brokers. So whoever the in want to buy or sell securities, that person's name is known as investors. These investors want have three accounts we told na, that bank account, demat account and trading account. Bank account they will go for the banks, and for trading account they will meet these primary brokers or stock brokers. And the trading account accounts will give access to the stock exchange systems to buy and sell, and they need to log into their trading account and buy the and sell the securities through this trading account. And these stockbrokers are mainly point of contact to investors to opening trading account or to place orders in stock exchange for settlement of trading, etc. If you go for this angel Angel, Giroda or IIFL, this all are in this intermediaries only, this stock brokers only. What we can do, we can install that Angel app, and we need to give the information, whatever the information they will ask, like PAN number, URM and phone number and mail ID something and bank account details. And after that they will give the access to trading account. If you want to buy any shares you can buy, if you want to sell any shares you can sell. For buying and selling you need one app, that is Angel trading app. That Angel trading app is the primary broker. Angel trading is the stockbroker which will give access to buy or sell securities in the trading account. Also trading account will be provided, and you can buy and sell the securities through this trading account. So these many stockbrokers in India are around 3000 plus there. In popular stockbrokers are will be Angels and Upstock, Zerodha, IIFL and 5% discounted brokers will be there. Thus regularly these banks also provided this broking services, that is Kotak Securities, HDFC Securities, ICICI, SBI securities. The banks also will providing. These stockbrokers collect brokerage charges from the investors and share that revenue with stock exchange. So what the stockbrokers income will be, whenever investor buy one share or buy one lot, they will collect some amount of 1%, 1.5%, something. If investors sell that stock, then also they will collect 1% or 1.5%, and some companies will go for the fixed amount, 20 rupees, 30 rupees. That will be for each trade, each transaction. So in market, in the market, they will buy whoever the investor want to buy and want to sell. They can buy and they can sell, and these stockbrokers will collect the amount as a commission. So this commission will be there. And primary brokers means the stockbrokers who are providing more services to their clients, like arranging securities for short selling, arranging money for trading, etc. Normally, the stockbrokers only help the client to place the order in the exchange if investors do not know how to place the order, or they will help the investor to buy with margin for intraday, etc. If you are buying or selling with the same trading day, then they can allow to buy of some amount for 500. If you have only 200, they will give some benefit, and they will allow you for 500 buying even if your account having only 300. This is the brokers will do. And this is primary brokers and stock brokers. Where how we see that clearing house or clearing corporations, what they can do means clearing house or clearing corporations will in each stock exchange will have some separate clearing houses or clearing up corporations. That's NSE Clearing Limited or BSE Clearing Limited, etc. For NSE, we have NSE Clearing Limited. These clearing corporations or these clearing houses is the central party for clearing and settlement of all trades done in the stock exchange. So what they will do, these clearing houses, they will the central party for clearing and settlement of all trades done in the stock exchange. Whatever the trades done in the stock exchange, they will settle by clearing and settlement. They will see, for example, if you are buy 1,000 shares in the Airtel company, and if you are if the seller he is the one person, that our darling Prabhas is there and he is the seller, this corporation, that is clearing corporation or clearing house, will collect the shares from that seller, means from our darling Prabhas, and deposit into your demat account. You are buying na, and seller will be Prabhas, you are the buyer. It will be deposited in your bank account. So it will collect from the Prabhas the shares whatever you have purchased. The seller will be Prabhas and buyer will be you. So you will for in your demat account they will credit. This clearing houses will see this all transactions for clearing and settlement for all traders done in any exchange. These parties will coordinate with other intermediaries like stockbrokers, depositors, custodians, etc., and complete the clearing and settlement. So buyer got the shares and seller get the money. So from you can go for any market. There may be the you will go with the stockbroker, you will go with the depositors. So this clearing house will catch up that person, stockbrokers, custodians, and depositories to complete this clearing and settlement process. And here, what they will do now, they will complete and they will clear and settlement to that buyer will get the shares and seller will get the money. Here, what are the depositories? Means who is the depository person? The depository person means this depository is like NSDL or CDSL will keep all securities in dematerialized form or in soft copies. So it is easy to carry out online trading. All companies should keep these securities on soft copy. So the details of these securities and ownership, like who owns how many shares, will be updated with these depositories. So in depository means depositories like that NSDL or CDSL will keep all securities in dematerialized form and are soft copies. So then it is easy for carrying out the online trading. Then all companies should keep these securities on soft copy, so the details of these securities and ownership, like who owns how many shares, will etc., will be updated with this depository. So these depositors will have all the data, whatever the in your dematerialized form demat account, where there is any change in ownership based on the trading in the stock market. So some person will buy, some person will tell sell. Then this trading, based on this trading, the change ownership will be changed. Due to corporate actions also, the ownership will be changed. This depository data will be updated whenever the changes will be happen. And where there is any change in ownership based on the stock action, they will see and what is the corporation they have taken. These depositors also give membership to other companies, like this Angels, IIFL, Kotak Securities, HDFC Securities, Zerodha, etc., to open demat account for customers. And these members companies are also called as depository participants. So where depositor is giving membership to companies, that membership companies known as depository participants, and if they will give the access to from membership, take the membership from stock exchange and depositors, so they can help any investor to opening trading account and demat accounts. And some banks also, they will provide the license to help the investor to open all the three accounts to participate in the securities market. What are the three accounts will be required to participate in the market? That is, one is demat account, one another one is trading account, and one another one will be the bank account. And after that, RTA means register and transfer agent. What is this? Who is this register and transfer agent? RTA means these companies like CAMS, that is Computer Age Management Service, CAMS camps, or fintech companies, etc., they will maintain records of ownership, like list of shareholders in a company, list of unit holders in mutual funds, list of applicant in IPO. Means if you want any information about anything, you can access from this RTA site. RTA is a site which will provide the any information to you. This is the person registrar and transferer agent. So it will person will be registrar, they will get all information. Whenever you want, you need to apply and you need to pay the nominal amount, some 10 rupees, 5 rupees will be there. And if we pay that amount from that register, they will transfer information whatever you want, and they will act as a agent for getting that information, and they will charge that nominal amount. If you want what the prime minister was done in yesterday, they will give that information also. That is the registrar. So RTA means these companies are computer agent management services, which will have the all maintaining the all records of ownership, and they will have list of shareholders. What are the shareholders in this company? If you go for the Reliance Jio company, who are the shareholders of this company, you will get. And who are in mutual fund, who are the unit holders is there in these mutual funds, they will get information from through this RTA site. And who are the custodians? Custodian means this party will keep the securities in their custody on behalf of institutional investors, that like mutual funds, hedge funds, etc. So for that mutual funds and hedge funds, they have already have their funds, so their funds will, on behalf of these institutional investors, the custodians will keep the securities with them. And for example, if SBI Bank launched from one fund by name of SBI Small Cap, and they will appoint some companies like this. Companies is there, BNY Mellon or Franklin Templeton, these companies and etc. has a custodian, and any shares purchased by that fund, that is any funds means any securities like real estate, bonds, etc., will be in the name of this custodians. So whenever this SBI mutual funds means, SBI mutual funds means what? Pull the money from the investors, they will invest in the securities and they will share the profits, so that securities will be maintained by these custodians, and the SBI will buy the securities in the name of these custodians. And these custodians in the market, these custodians will participate in the clearing and settlement process on behalf of that institutional investor, that is our in case SBI. And in secondary market, we, any company trading at some price at today, and can you buy that in different price. So when, if you want to buy that shares, what you need to communicate means how to communicate your price to stock exchange. For example, the company Tata Technology company shares is trading at 1500, you need to buy at 1300 only. How to quote that price in the stock exchange means anyone can place the order to buy or sell in the stock exchanges through their stock brokers or using the apps or login details provided by those stock brokers. So from this angel broking, IFL apps, you can place the orders for to buy or sell, and there may be bid price and there may be ask price. Bid price means is the price quoted by the buyer for that securities. So if you want to buy and what the buyer was quoted for that securities, it is the bid price. For example, if you want to buy that some Reliance Jio shares at 50,000 per share, you can mention the quantity, how much quantity you need, and share price, and place the buy order, and like buy that. For example, if you need to buy at 20 shares at 50,000, then 50 into 20, 15 means it is huge amount na. If you want that price is there 1000, and it will be 20 into 2000 means it will become 20,000, you need to pay that 20,000 amount. That is buy bid price. Bid price means price quoted by the buyer. And ask price means offer price. This is price quoted by the seller. Bid price means buyer quoted price, BB, and ask price means that is offer price. This is the price quoted by the seller. If in any want to sell any shares at the of that company, if you have any shares, that is Reliance Jio shares are there in your account, you need to sell that account, then you need to place sell order. So for that sell order, you have this some percent or shares you need to sell at this prices. So then any buyer will try to negotiate the price and buy at lower price than ongoing prices. That is ongoing prices means here that is last traded prices, and any seller will try to negotiate and sell at the better price than last traded prices, that is ongoing price or market prices. So here the bid price, ask price means, bid price means where the buyer will quoted the price will be bid price, and the ask price means where the seller quoted price will be the ask price. In bid price you can buy the shares, in sell ask price you will get the money. In bid price you will need to pay, and in ask price you need to pay the amount because you will get the money because you are selling. And whereas we have used the term last traded price. Last traded price means when the price of a buyer and seller matches. Means you are telling for 2000 and other person is telling for 2500, and after that you have increased to 2100, and after that he has decreased to 2400. Finally you are settled at 2300. That is, buyer and seller matches at one price, trade will be happen. Based on the latest trade, this traded price is reported in the market as market price of that security. So whatever the price traded at the last trade, that will be reported in the stock market, that will be last traded price. And for example, in a for example we have seen now, that is 2000 and 2500, at the last trading price will be the 2300, and where we need to closing price means they have, if you see in market we have two prices, mainly one is open price and another one is closing price. This opening price means when the market was opened, I think 9:15 to 9:30 it will open. At that point of time, some person was buy the company shares at some price. First traded price will be shown here in open price, opening price. That closing price means market will end at 3:30 p.m. regular basis. For last half an hour, they will take the prices of that company. They will do the average. That average price will be shown as closing price. Closing price means this is the closing price of the securities for the day in market. Generally, this is the last traded price for that day. There, here most important, the price range of next trading day is decided based on the price, and all investors like mutual funds decide the day gain or loss based on these prices. So also the derivatives will go for margin or decided on this price only, because they will go for the daily settlement basis, that is mark to market. So to keep it more accurate, and this number is actually reflecting that day market conditions and demand and supply. This may calculated and reported based on the volume weighted average price of last 30 minutes traded in that day. And Indian market, it will be work from 9:15 a.m. to 3:30 p.m. If that Reliance Jio company shares is only traded once in last 30 minutes, or last trade happened 12 p.m. or 1 p.m. at some prices, then that will become the closing price for that trade date. If these are how some 10 transactions in the last 30 minutes, based on the volume weighted price, the calculation will be taken. They can report the closing price as that weighted average price for last 30 minutes. And this way volume weighted average price means number of shares into traded price is calculated for all trades, is divided by the quantity, whatever the price was there, and divided by the quantity. If you have trade first trade and second trade and third trade, that is the value, and whatever the traded value will multiply and divided with the value, then he will get the weighted average price that will be indicated as closing price. And whereas opening price, that open price means, yeah, this is the price at which the first trade has happened for that day, and this can be different from the previous closing for the accounting purpose. If we see in the accounting, whatever the closing price of last day, it will become the opening price of this day. If you go for the balance sheet dates also, 31st March prices, what are the 31st March prices will be there, it will be carry forward to 1st April. It is normal accounting. But in stock exchange, if we see opening price and closing price, there may be very different, because opening price is the price at which first trade happened for the day, and this can be different from the previous close, since yesterday market and the today is different, and based on the change in demand and supply and change in price can be happen. And for example, same example, that Reliance company is there. Reliance company was open price, he is some amount, and if the shares are purchased and sold by two parties at some time, it will open at 9:15. One person has buy at 9:16 and sell at 10 o'clock. So firstly traded person 9:16 he has purchased, no? At this time, whatever the price will be there, when the market is started, what is the first trade happen from that 9:15 a.m. to 3:30 or any time in between, the first trade price will be taken as open prices. And due to expected this recession in the market in USA, if the stock are falling, so more money is moved to defense stock like this, companies, etc. So due to more demand, today price can be more than yesterday prices. So after the market end, there may be some reasons the stock prices will go up or go down, and these buyers will quote any price to negotiate the buying the shares. So here, stocks will have some limits to decide by exchanging the minimum percentages. Maximum percentages will be there, 5%, 10%, 20% momentum from previous close to yesterday's days. So means, but the buyer, the market reported has 2000. If you are trying to put has 10,000, it will not allow, because if it was allowed, the companies who have more money, they will try to increase their share price. They only buy at higher prices, so that this this regulation, this exchange will not give that permission for more prices. If you are traded at last day 20 1,000 rupees, it will allow up to 5% adding or 10% adding or 20% adding momentum from the previous close or yesterday's market price, to ensure that volatility in the market is minimum, so retail investors are not losing more money. Mainly these rumors in the market, or give some time to investor to understand the actual impact of the news and decide the market price. So if for example you are seeing the news, in the news the Reliance CEO was died. So for that reason, the market will go down as like anything. So for that news confirmation also requires some time, because nowadays the social media was very elegantly working, which giving more fake news also, because they want views. So to know the actual position, that time will be required, so that exchange will not give more prices to buy or sell in the market. If you want to buy or sell, it will allow by adding this 5% or 10% or 20% maximum prices will be there. If the price is trading at 1000, you can go with 1000 into 20%, I think it is 200, means 1200, up to 1200 it will allow for trading. If you are quoting 10 is adding, that is it will become 10,200, or if by mistakenly if you have added two zeros at the end, it will become 1,200. It will not allow, exchange will not allow for which price is trading at 1000, you are quoting at 1,200, will not allow by that exchange market. And this is the price will be there, so difficult to assess the impact will be there, and low price. If the stock the exchanges decided the lower circuit will be kept, means If we see in the stock exchange, we have some lower circuit and upper circuit. Before that, upper circuit or below that lower circuit, you cannot allow to trade. So investors can try and understand the right price for the stock price. If they feel that a stock is still at high after taking impact on that company due to expected lockdowns, or they will be price will go buy and sell in the market on daily basis. Stock price can keep going down or also. However, it is also allowed, not allowed in a day. It is not allowed within a day. Similarly, some circuit breakers will be there in index Nifty 50 also. If Nifty 50 is trading at 20,000, it can go down or go up maximum 20% in a day. This may keep 10% at one circuit breaker, and which means the trading will be stopped at exchange around 1 hour, that is 15 minutes or 1 hour approximately, depending on what time it has happened before or after. And if the market went up or down by 20%, they will stop the operation, the exchange, for the rest of that day. What market is going the below or upper circuit, they will try to stop for certain time, 10 minutes, 15 minutes or 1 hour maximally. They will see the what is the position, what is why the reason for this circuit going more and going below. And if any one person want to buy the shares or sell the securities in the stock exchange, you need to code the separate numbers for different stocks, and different will be there. This quoting price will be the buyer and seller can need to participate in the market without quoting a specific price in the market by placing the market order. The market order, if we have market order, we have two types. One will be popular in the market, that is market order, and another one is limit order. In market order, in this case, buyer is ready to pay price quoted by the seller. So if we go for the market order, the buyer is ready to pay the whatever the seller is said, or seller is ready to sell at price quoted by the buyer. There is no negotiation. So if we go for the market order option, there is no negotiation. Negotiations will be happen. They will not have any bargaining process. And here, whatever the company is, Reliance Jio is traded last traded price, and the orders was pending, and whatever the price quoted that persons, some orders they will process. If you place any order to buy some shares in market order, you will get at best selling price available in the market. Where if you go for limit order option, in this case the buyer or seller can quote the quantity as well as their price to buy or sell. So where if you go for the limit order, you need to quote your order and your buying price, or if you are going for selling, you need to quote the selling price. In this case, if the price quoted by buyer and seller matches, order will execute, else the order will be cancelled. Where in market order option, there is no negotiations. In limit order, they will quote some range prices, and another person also quote their limit percent, and when the same is matched, the trade will execute. If the it was not matched, it will be cancelled. For example, you are quoted at 5,000 rupees for Reliance Jio. You are the buyer, and another person 5,000 to 5,500. Another person is quoted at 5,300 to 5,800. So 5,300 to 5,500. 5300 to 5500. So the trade may execute in between these prices. Or if you are quoted at 5000 to 5500 and other person is quoted at 6000 to 6500, the trade will cancel, means it will not executed the order and order will be cancelled. There may be some cases it have partial orders. Execution is possible. Means if you are want to buy some shares, means you are quoted 5000 to 5500 and another and order was 10 shares you are required and another person is ready for 5300 to 5800 5 shares only. So for that 5 shares the order will be placed and 5 shares order will be cancelled. It will also possible in some cases and where here the best price. Whatever the best price, how can decide the best order or how the stock exchange give the priority, means if seller is quoting lowest price, this is considered as best order and reported as first order in the order book. For example, if you are sell order for 200 rupees and now you are placed at prices 199 rupees, so it is sell order for 200, you are placed at 199, so your order will become the first order for buy order and person quoted high prices will be the best order. So if you go for the buy side, it will be the highest price will be the best order. If you go for the sell side, lowest price will be the best price in the market. And it will happen all the orders are given based on priority based on the prices. If any two persons are quoted the same prices, then time wise priority is given. For example, if I am quoted at 12 p.m and another person also quoted at 12 12 1 p.m, so I will get the priority because I have quoted firstly with same prices. So person placing that order first will give the priority and there will be no matching orders. I mean buying quoting lowering price, selling quoting higher prices, no traders will happen. Now if you place market order, that is there is no bargaining na. So if you are okay to sell a price quoted by the buyer, so execution will be happen in the order. If in the last buy order, if we are going for sell order, we will need to wait up to whatever the order was completed. In our example, we have a quoted for 10 shares, but I got 5 shares and remaining 5 shares I need to wait. Another seller will come at that prices. And if you want to stop your loss, you need to go for stop loss order. And this stop loss order means if you are that current market price is at 199 and you are have the stocks of 1000 stocks purchased at 198 or 199, you are purchased and targeted at 250 rupees or 260 rupees in 2 days. If you are quoted traded, you want to go for the stop loss now. In this case, you need to play the order at some price and there will be the trigger price. In if you play the order at some price, that is 240 rupees, and now the where market price is 250 rupees, the order will be executed immediately since your order is cheaper than the others. If the same order is placed at stop loss order, means your order is placed only after the price reaching to trigger price level. The price will be if the stock is trading at some amount at morning and it was reached at mid of the market, mid of the day, when your order will be placed in the market to sell at some price. If price never reach that price today, your order will never placed in the stock exchange. So whatever the stop loss order means, I have kept at 200 to 250 na. If price reaches that range, then only order will be executed. If price is not came that price, the order will not be executed. And this kind of stop loss order can be used when the market is volatile and prices are changing very quickly. If you went into the stock market, every second the stock prices was changing, so that the investor will quote the price, this stop orders, the stock prices whenever reach that stock prices whatever you are quoted, then the order will be executed quickly. This can be placed by the buyer or seller order with the help of trigger price. Here buy at some price and target trigger price will be there. Trigger price will be there to whenever the trigger price is reached, the order will be executed. And here we have what is the trade life of cycle for this. So here trade means buyer purchase the securities and seller sold the securities, means buying and selling will be happen in the exchange. Here buyer or seller will be there. This is trade means buyer will purchase the securities, seller will sell the securities, where price matches between the buyer and seller. These trades happen in the market. All traders will be settled, that is clearing and settlement will be done by clearing house by coordinating with all intermediaries in the market, like this custodians, stockbrokers, depositors, etc. So all the traders will be settled. This clearing house is there, it will settle, and by coordinating with intermediaries, with the intermediaries mean this custodian, stockbroker, depositor, etc. This will be in sequence of activities happen in the market to complete the clearing and settlement of traders, also called as trade life cycle. Trade life cycle means it is all trade will be settled by clearing house based on the sequence of activities happen in the market. To complete this transaction clearing and settlement traded, this will be known as trade life cycle. At the end of this clearing and settlement completion of trade life cycle, buyer will get the securities and seller will get the money. This is trade life cycle means in the market. So in trade life cycle there may be pre-orders and post-orders. In pre-orders, place the order by the buyer to buy the securities or sell the seller to sell the securities. Seller will place an order of the as market order, and order will be reached to stockbroker, this angel, IIFL, and it will verify the order and play the stock exchange system, where stock exchanges like this NSE, BSE will receive buy and sell order and display the order to all participants. So in trade life cycle, what will happen means the company, the company, or the buyer who want to buy the securities or seller who want to sell the securities. If you are want to buy the company's share, or company want to sell the shares, what they will do now? These companies who want to sell their shares, they will give that in stock exchange. So in app they will quote the order. Once the order was quoted in stock exchange, it will go to NSE or BSE, and that NSE and BSE will display to all participants who are opening in their app of particular stock of the company. They will display what the seller was quoted, and the stock exchange will display top buy orders, that is highest price quoted among the buyers. And if we go for the sell order, top 5 sell orders, which is low price quoted out of all sellers in the order book. When the price of the buyer and seller matches, the trade will be happen. Match does not mean the quantity and price need the exactly match. Here, when the price of the buyer and seller matches, the trade will be happen it normally. For example, if you are quoted at some price 450 rupees and the buyer want to buy at 440 and best selling price will be 441. So now buyer can increase that amount or seller can decrease that 1 rupee different. So trade will happen assuming both will be agreed at 40.5, and by increasing and seller decreasing trade will be happen at per day. That is the pre-order, pre-trade. And what happen in post-trade? In post-trade, once the trade is happen at stock exchange, this stock exchange will send all the trade details to clearing house. And for example, if you are 50 lakhs are traded in Reliance company and 1 lakh traded in that TCS company happen today. All these buyers and seller details will be sent to NSE Clearing Limited, that is clearing house, by tomorrow morning, and clearing corporation take the responsibility to settle all the trades. So buyer will get securities and seller will get money in their market. If we see whatever the trade you have done in the daytime, and you will get the message related to that trade after the market ends. That will happen, you will get the messages related to trade after the market end at maybe after 8 p.m., 9 p.m., or even though tomorrow also, and they will process. Clearing houses will send all details to stockbroker to confirm their client trades, and they will confirm back. This Angel, Zerodha, IIFL will confirm to their persons who are using the app. And where has this Angel, the client, purchased the shares and sold the shares, and this Angel will confirm the details to clearing houses. When the stockbroker confirm the details, clearing house will send the instruction to them to settle the net obligations. Whatever the price you have quoted, based on that price you need to settle the amounts. And this CC, that is clearing corporation, will instruct clearing bank to arrange the money, and clearing house will instruct the depositor to arrange for the securities. So for bank accounts they will tell that you need to maintain this much amount. For depositors means sellers, you need to arrange this much of lot of shares to give that person. So where has to arrange for securities, it will ask to NSDL or CDSL will have all securities ownership details. All parties in this trade life cycle will get the details from two different sources. So there are less chances for any error. So the stockbrokers will get trade confirmation from exchange, and then from CC depositors will get instructions from CC and also from stockbroker to transfer the securities. Here we have four related. One is pay in money, and one is pay in of securities, one is pay out of securities, and pay out of money. Pay in of money means clearing bank send money to the clearing corporation. So pay in means clearing house send money to clearing corporation. Pay in of securities means depositories will send the securities to CC. So firstly, pay in money means clearing bank, which is clearing bank is there. That bank will send the money to clearing corporation. Whereas pay in securities means depositories will send securities to this clearing corporation. Pay out of securities means clearing corporation will instruct the depositories to transfer the securities to buyer account. And pay out of money means CC will instruct the clearing bank to transfer the money to the seller, and this total process of clearing and settlements may take 2 to 3 days. If you are buying the shares on Tuesday and you will receive the shares on Friday or Saturday, that may be T plus 2 days, 3 days will be there. In ET has planned for T plus 1 day in stock exchanges from that February 2022. In our cases, will have T plus 1 day in now trade life skill concept, and we will see next concept in next video.